my name is Kendall Rawls, and I'm Director of Development with the Rawls Group. In this episode of What's Up with President Biden's Tax Proposals, Kevin Gilbrath, a tax partner with Pro, and our very own succession planner with the Rawls Group, Jeff Bannon, discusses what is happening with the 1031 exchanges for real estate. Here we go.
So currently, a 1031 exchange only applies to real estate property, which allows investors in real estate that are planning to sell their property, but then roll all those funds over into the next piece of real estate. This part of the tax code has been helpful for a very long time so that you're not burdened by the taxes on something you have no cash flow left over for because you rolled over all those funds. And while 1031 exchanges have lots of tripping points, lots of things that if you don't do it exactly to the code, you could end up in a taxable situation you didn't intend, which we won't get into here. It's a very powerful tool. And what the hot topic of discussion right now is 1031 exchanges was also part of the White House's Green Book kind of wish list of tax items that they would like to change to help fund some of the governmental programs that they want. And one of the wish list items was to significantly limit 1031 exchanges. Because right now there's really no dollar limitation. There's just, it has to be real estate and you have to follow kind of the long set of rules for that real estate when you roll it over. Their wish list is looking at putting a $500,000 cap on the amount of gain that you could defer on real estate that you're selling and then rolling into the next property. And we all know dealership properties are getting more and more and more valuable as the years progress. And it's not uncommon to have the $20 to $30 million piece of real estate, and that's your dealership. If you're planning to sell that dealership, reap those gains and roll it into the next point that you're interested in, your gain could be much, much more than $500,000. And if they change that, that would really kind of limit some of the tax planning tools that we have.
Yeah, so speaking of that, Kevin, I haven't looked into this as much, but I guess a question that pops in my head is that if they do limit or cap the amount of gains you can roll over, everything over that cap would be subject to long-term capital gains at that point. And in a prior conversation we just talked about the taxes rate of capital gains going up. Is it theoretically, is it on the radar that capital gains in excess of $500,000 on a real estate transfer would effectively be subject to ordinary income? Is that a conclusion?
Yeah, basically our worst case scenario for taxpayers is that they would get their ability to roll over all of that gain tax-free into the next property, and then their tax rate would almost double by going up to ordinary rates. Now, is that actually going to happen? I don't know. I'm skeptical. I don't know that they have all the votes, but I do know the government has spent more money in the last 18 months than I've ever seen in my lifetime. And they're going to have to pay for some of these programs somehow. So I think tax rates are going up. That significantly, I don't know, but it's something to kind of look at. Hey, was I planning on selling this real estate already and rolling it into something else? And the other question, should I go ahead and speed up that timeline so that I eliminate this risk of getting my tax rates doubled or getting the 1031 exchange ability taken away from me? Because the exchanges that you do today under current law, they're not going to retroactively go back and strike those down. So something that you did in 2021 and use the 1031 exchange to defer your gain into that next property would be very, very beneficial. So there's some risk there. I don't know if the legislation will pass, but it's definitely worth a conversation. What were we planning on selling, and should we speed up the timeline?
As Kevin and Jeff said, if you're thinking about selling property and leveraging a 1031 exchange, you may want to consider moving your timeline up. However, big caveat, please lean on your team of advisors to make sure the tax tail isn't wagging the dog. Want to take action but not sure where to start? Contact either Kevin or Jeff at the email addresses listed on the screen and leverage our succession readiness survey. A 7-minute investment in time will put you in an informed position of opportunities many business owners overlook, impacting business value, growth, lifestyle, and ultimately achieving your vision. The next episode of this series focuses on understanding there may be some urgency to using a lifetime exemption. What assets should you gift and who do you gift it to? Continue listening to the series now or come back for more. Each topic featured may want you to learn something new.